Hello, real estate investors. My Facebook feed is flooded with people asking me questions about the impact of coronavirus on real estate. And one of the questions that I wanted to answer specifically is what is the likely impact on the apartment real estate industry? And I divided that into two segments, the short-term effects and the long-term effects. So if you haven't watched the short-term effect video, you might want to watch that one first. Let's talk about the long-term impact. So at this point, the Federal Reserve was convinced that interest rates didn't need to be cut further. We were not looking to get more interest rate increases, that the rates are already pretty low. But 3 days ago, on March 3rd, as an emergency effort, they cut interest rates. And they cut them by 0.5 point, which is a very large cut. And is immediately following that, the US Treasury bonds, the 10-year treasuries, fell to their lowest level in 150 years. 150 years. And immediately we started getting advisories in the apartment industry from Fannie Mae and Freddie Mac saying, hey, rates are going to go down over the next few weeks as we adjust for this massive 0.5 point cut that nobody really saw coming. In addition, what is important is there is now news that the Bank of England, the Bank of Japan, and the Eurozone banks are also looking to do their own rate cuts. And some of those areas, treasuries are already negative, and so they will go down to -1 or -2. These negative yields put a massive amount of pressure on these billion and trillion dollar funds because they're holding a lot of these bonds. And when those bonds go negative, well, they have to get their yields for their pensioners somewhere else. And it's likely that they will continue to invest in risk assets. We've already seen this impact over the last 7 years as interest rates have continued to decline over the since the 2008 recession. We've seen all forms of risk assets, not just real estate, but anything that's a risk asset go up in value. And I thought that those were plateauing. So the cap rates were as low as they could get. And this black swan event changes that. The long-term impact on the apartment industry could be quite substantial because once the Federal Reserve cuts interest rates, they are known for not raising them for a minimum of 1 year. Why? Because it actually takes a rate cut 9 months to wind its way through our economy. Obviously, it has a psychological impact today, and you saw that with the stock market going back up. But the long-term impact, the real impact of rate cuts takes 9 months to get there. So why would you cut interest rates and then raise them a year later? Bottom line is, we may see for the next 18 months absolutely the lowest interest rates in the history of the apartment industry, which means that we could see cap rate compression, which has plateaued, start again, and we might see it for the next 18 months. Now, of course, if you go into a severe recession, you could actually see cap rates go up, which means prices go down, right? It's a recession. Prices go down in a recession. But fundamentally, nothing changes because whenever that recession ends, you should see a very quick bounce back for the apartment industry because those ultra low, ridiculously low interest rates are supporting higher prices. So two scenarios. One, we don't go into a recession, the apartment industry stands to benefit from ever lower cap rates. Number two, we go into a recession, we see a price increase, which in my mind is a phenomenal buying dip, right? Because at the end of that recession, you still have these ultra low rates and they'll probably stay low for several years. Remember, after the 2008 recession, rates stayed low, not for 1 year, not for 2 years, but for 3 years because the economy was too weak to absorb rising interest rates. And I think the same thing will happen if you have a recession this time, no matter how deep that recession is. So bottom line is the long-term effect of interest rate cuts and the coronavirus black swan event is likely to be very positive for the apartment industry. That is not the case for short-term effects. So if you haven't watched the short-term video, check that one out because there's a few things to worry about there. Let me know if you agree or disagree with my comments. Thank you.